Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly sector review for January 26, 2024. Starting off with bots, the artificial intelligence ETF. As we closed last week, we were talking about how a breakout in bots would help improve the position of this market and help drive it higher. Bots did continue higher this week on a little bit of an increase in volume. However, across the sector, there was a mixed reaction really early in the week, especially on Monday, coming out of the opening bell. There was a wide number of artificial intelligence stocks that were breaking out on volume. They then lost ground by the end of the day, and the rest of the week, many of these stocks acted weak. So it looked promising, especially coming out of the SMCI reaction on Friday of last week, and then it kind of just fizzled out after Monday. And the fizzling out is something that happens a lot during choppy markets where the breakout just refuses to happen until the market's kind of ready for it. So we saw a lot of fake attempts to rally during that July to October 2023 time period where the market really just had to finish off the correction before it continued higher. And that reminded me of what happened this week with the artificial intelligence stocks kind of just mostly fizzling out. Some of them did continue higher, but there was a lot of action that just didn't continue higher. So we'll see what happens here heading into next week. Microsoft and Google report earnings next week. That should have a big influence on the market, and that could potentially really influence this sector. Now, the semiconductors, again, the strongest sector in the market, the sector that really moved the market out of the January consolidation, gave up most of the gains for this week on heavier volume as well. And what happened was Intel reported earnings on Friday and got crushed, and that helped influence this pullback. So this is very interesting. AMD reports earnings heading into next week. That's a very influential stock in this sector. So, watch for that to influence this as well. We definitely don't want to see semiconductors start to fail here. That would be a big blow to this market. SMCI is still acting really well. So, you've got a couple leaders, but Intel kind of put a warning sign on the action this week, and we'll see what happens heading into next week. The home builders, again, another sector, just like artificial intelligence, had the setup here to continue higher and just did the exact opposite. DHI was the stock that really influenced this move. It sold off on heavy volume after earnings. You get a failed breakout here, and then all of a sudden you're retesting the 10-week moving average. If this thing sells off on bigger volume next week, that's a warning sign as well. So really some major indecision here, but this needs to resolve higher to, for this market to remain bullish. This is definitely, one of the top sectors heading into this past week. So you don't want to see a breakdown here. Now, the US dollar, again, we've been talking about this all year. This is going to have a major influence on the market this year. You've got this just sideways choppy range that the US dollar has been in for over a year now. And when these downtrends occurred in the US dollar, both in March and in May of 2023, is where you got some massive uptrends in stocks, also in October 2023. So this is where the artificial intelligence rally really ignited, was right around when the dollar started breaking down and helped power some huge advances in individual stocks. So we want to see what the US dollar does here and whether it breaks down, moves into stage 4, or if it breaks out here. I think at this point, a breakout really would just be the cherry on top of the upcoming correction, given where the market's positioned right now. Um, but vice versa, we could continue this rally because if once the U.S. dollar becomes under pressure and not a safe haven, then money wants to flow to other things, and that's what we saw this week. We saw commodity stocks start to rally. We saw oil and gas stocks start to rally. The price of oil started to rally. Emerging markets started to rally. So very interesting action, and I think there's money probably betting on either side here. So we'll see what the market does. It's important to really follow along with the market here. But whichever way this breaks is going to be critically important. And turning to precious metals, again, still processing this correction, but still in great position. Gold sold off, but the volatility is contracting here. So, we're in position if the dollar does break down to break out. However, we could even, move down and retest the 30-week moving average as well before resuming higher. So we're just kind of still processing the correction. Same thing with silver. Silver did reverse on just about above average volume this week. So trying to hold support here. This is what it needed to do. And we'll talk about in the last section of the newsletter, this current setup in precious metals is starting to look similar to a couple other very bullish setups in both 2016 and 2019. So we'll see what happens with that. Turning to the mining stocks, we don't, have anything here that's really calling out a bottom as well. We need to see volume come into the sector. Again, big volume is what drives major advances, and that is what occurred, in previous examples, but we don't have the volume coming in quite yet here. Same thing with the silver stocks. Did outperform silver this week, but the volume was on the lower side. And again, we don't have an indication yet of a bottom here in precious metals. Bonds are another market that could really influence stocks here. You've got 2 consecutive weeks now of heavy volume to the downside, sitting right at support, right at the 10-week and 30-week moving averages. A breakdown here would be negative, just like what we had back in the July 2023 timeframe, where a downtrend started and really hammered stocks to the downside. The automotive sector and the home builders, to a lesser extent, are being influenced by this market. So it needs to really hold up here and to really support the stock market. Some of these beaten down sectors that advanced this week, the airlines are attempting to move into stage 2 again. There was a wide sector move in stocks in the sector this week. Almost all of them were breaking out into stage 2 along with the sector, and volume was above average in many of these stocks. So interesting setup here, coming out of a major low and attempting to resume an uptrend. Copper moved higher this week. Volume wasn't exceptional, but multiple stocks, related to base metal production and copper production perked up this week. And again, the broadly diversified commodity space is kind of in a basing pattern. So a breakout here would kind of go along with a breakdown in the US dollar. Finally, looking at the Chinese stocks, again, a market that has a lot of potential, but just never really followed through in 2023 after a big move higher. Many failed breakouts. Then, as we discussed at the end of last year, this relative weakness really gave way into another mini downtrend, but then you had massive volume come in this week. You've got a bullish engulfing candle and potentially maybe cementing another bottoming attempt, just like we had back in October 2022, massive volume comes in, and then all of a sudden the market reverses and we're back in an uptrend. So watch for a major reversal here. This could be very tradable given the fact that many of these stocks are very beaten down. The KWEB ETF did a similar thing as FXI. It's rallying on above average volume here. And again, you've got like this failed breakdown setup where you break below a support level. Some of these bears capitulate, and then all of a sudden you break back above it, and you're in an uptrend. So that's something to watch for here, heading into the next few weeks. So overall, as you can see in the sector review, the U.S. dollar and bonds really are at the critical junctures. Many anti-dollar plays did rally this week, perhaps suggesting the U.S. dollar might be ready to break down, but we need to kind of see that confirmation in price. Otherwise, if we do get a breakout in the dollar, I would look for a correction to start in the stock market, and then you'd want to wait for that correction to play out before getting back into the market, which would be a better buying opportunity.